Hey taxpayers, it's Tiffany Gonzalez CPA here, founder and CEO of Accounting to Scale. And today I want to talk to you about the difference between a SEP IRA and an individual 401k. Many times, my solopreneur S-Corp business owners ask me, what is the best account to save for retirement? I love talking about retirement and I love helping business owners maximize the way in which they do this. Let me first preface this video by saying we're all different ages. We all have different retirement goals and we all have a different family makeup. And for that reason, you really want specialized, individualized retirement advice. For the purposes of this video, I will speak about the general overview and the differences between the two, but I still recommend that you speak with a financial advisor or a CPA when opening one of these accounts. The SEP IRA and the individual 401k both help you save pre-tax dollars for retirement. Where they differ is in the contribution limits, requirements, and fees. The SEP IRA allows you to contribute 25% of your salary up to a maximum of $58,000 in the year 2021. The individual 401k has an employee contribution limit of $19,500 and an employer match of 25% of your salary up to a total contribution of $58,000 in 2021. So at first glance, you're saying, Tiffany, they both have the same $58,000 max contribution for 2021. What's the difference? The difference is how much you actually need to pay yourself in order to achieve that maximum. And the reason why we care about that is because of payroll taxes. If you want to learn more about the way payroll works and payroll taxes, click right here. We made a video on that just for you. So here's the example. You put yourself on payroll for a gross salary of $40,000. With the SEP IRA, your maximum contribution is going to be 25% of the $40,000, which is $10,000. Now, let's say you actually have an individual 401k instead. Paying yourself the $40,000 gross allows you as an employee to defer the maximum $19,500 and then match as an employer another 25%, which would be $10,000. So with the individual 401k on the same salary, you can put away $29,500. So if we look at the two in this example, the individual 401k allows you to put away much more money while still paying yourself the exact same salary. In fact, to put this into more perspective, in order for you to put $29,500 into the SEP, you'd actually have to pay yourself $120,000. That's $80,000 more, which would cost you $12,000 in payroll taxes. So now you're saying to me, okay, Tiffany, it sounds like the individual 401k is really the best way to go. Why would I ever consider the SEP IRA? And the reason why is because of fees. An individual 401k costs more in fees to manage and maintain as compared to the SEP. So while you can put a lot more away, you have to expect that you'll pay more fees in an account such as the individual 401k as compared to the SEP IRA. Now, I completely recognize that every business owner may not be planning to send such a large amount to their retirement account. Sometimes the cash flow just isn't there yet. So if the goal is to save a bit for retirement and to save a bit in taxes, then I would usually recommend to go with the SEP IRA. You'll have less fees, it'll be more simple to open, and you're not planning on really maximizing the contribution limit anyway. In fact, depending on the contribution amount, I might even recommend just a regular traditional IRA. A traditional IRA has a cap of $6,000 per year, and it doesn't even involve your business, has even less fees. However, if the goal here is to put as much possible into retirement accounts and defer as much tax as possible, then the individual 401k is usually the better route. It's important to note that this video is specifically for solopreneurs of an S corporation. If you are a multi-owner business or you have other employees on W-2 payroll, then there are other types of retirement accounts that are available for you. One more side note why I really like the individual 401k is because you usually have the option of selecting an individual Roth 401k. The SEP IRA does not have a Roth option. To summarize, we usually start this conversation talking about what is the goal. Is it aggressive retirement savings? Is it tax savings? How much money do you have available to contribute to retirement accounts? We then jump into the conversation about payroll. Are you already issuing yourself a payroll? Do you need to start issuing yourself a payroll? Is there anyone else on payroll? From there, we can figure out best next steps. This is just one of the many ways I really love to help business owners like you. If you have a financial term or a topic you'd like us to discuss, please leave it in the comments below. We love your suggestions. Hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.